NVIDIA. It is under pressure again today, along with, as we've told you, the rest of technology. Those shares are down 11% since the company's earnings warning earlier this month and more than 50% off of their high. Tech investor Paul Meeks, many of you know that name. He thinks there's still more downside ahead. He says he's not going to be a buyer on this dip. Even on the dip, he says. It's our call of the day. So, Josh, I'm going to turn to you first, and Jason Snipe, I'm coming to you. He says, and I quote, and this was an interview that he did with Street Signs Asia, CNBC Street Signs Asia. Quote, the way I look at NVIDIA, I think, unfortunately, it can go lower. I would not be a buyer even on the dip. It seems that every time they report or communicate to us, they're lowering numbers yet again. You cannot buy a stock, even if it becomes relatively inexpensive, when numbers are still going down. Their problem is about a third of their sales come from gaming. And what you could read there is crypto, because quite often these chips are used for crypto mining. And, of course, that asset class has absolutely been crushed. So, Josh, what's your response to a well-known investor like Paul Meeks saying, don't touch this thing?
Well, I don't know. I don't know that he's saying never touch it. I guess maybe what he's saying is the stock can revisit the. Okay, that's fine. I owned it 10x ago, so I'm going to stay with it. But what I would say on NVIDIA specifically is that it's not a mystery that demand for chips used in crypto mining is going to be non-existent right now. Everyone understands that. So the question becomes, this was a $320 stock that's now $160. Are we saying this is like a revelation? Is this news to anyone on earth? I don't think so. So a lot of the concern about that segment of the business, even if 100% of it is not in the stock, you have to think at least 80 to 90% of the concern about that segment has been priced in. The market's not totally blindsided by this. The second thing, though, that I would say, this has always been a high beta stock, which means it's feast or famine. And when I describe high beta, let me put some numbers to that. It's got a beta of like 1.65, which means for every 10% move in the S&P 500 in both directions, NVIDIA has moved historically 16.5%. So think about that. We're in a downtrend. Tech specifically is in a massive downtrend, a legitimate bear market. NVIDIA is a $450 billion market cap, very highly visible technology stock. Expect volatility. Expect 60% more volatility than the overall stock market historically. But understand that that works in both directions. And at some point, a lot of the negativity about things like gaming will be fully priced into this story.
So, Jason Snipe, do you see it the same way? What's your view here? You've owned it, I think, a bit of a less smaller period of time than Josh Brown has.
Yeah, but I agree with a lot of what JB just said. I mean, look, if you're looking at gaming as an example, you know, about 30% of revenue, I mean, I think this has been more of a path to normalization. There was so much demand pulled forward through the pandemic, you know, so I'm not shocked by those numbers. But again, the print wasn't great. I mean, it was a miss on EPS, a miss on revenue. But data center is still up 60%. I think there's some real resiliency there. Yes, it was up 80% last quarter. So there's some normalization happening there. And there likely will be some more volatility in the short run. But they sit at the beltways of innovation. For me, it's still a long-term hold and nothing to disrupt here. And I would be looking to buy on some dips over the next couple months.